Ladies and gentlemen, good evening and welcome to Kiaasa Retail Limited H2 and FY26 conference call hosted by Confidely Partners. As a reminder, all the participants' line will be in listen-only mode and there will be an opportunity for you to ask the questions after the presentation concludes. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference may contain forward-looking statements about the company which are based upon the beliefs, opinion, and expectation of the company as of the date of the call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. We represent the investor relations for Kiaasa Retail Limited, and the company is represented by Mr. Om Prakash, who is the managing director. I would now like to hand over the call to Mr. Om Prakash for his opening remarks. Thank you, and over to you, Om, sir.
Good evening and a very warm welcome to Kiaasa Retail Limited's first earning conference call. I am Om Prakash, Chairman and Managing Director, and it is a distinct privilege to address you following our successful listing on the BSE SME platform in March 2026. I would like to begin by expressing my sincere gratitude to our shareholders for your confidence in our vision of establishing Kiaasa as India's most accessible fashion luxury brand. For those acquainting themselves with our company, Kiaasa is a high-growth, omni-channel women's ethnic wear brand specializing in affordable luxury. Acquired as a stress asset during pandemic, the brand remained fundamentally rooted as a pure offline EBO. Today, we are relentlessly optimizing our operation to achieve online presence through an unique omni-channel model. We strategically cater to the rapidly expanding value-conscious consumer base primarily within Tier 2 and Tier 3 cities. Our core portfolio is anchored by Salwar Kurta Dupatta sets, which contributes to more than half of our product mix. By maintaining a disciplined average selling price of 2,000 to 2,500 rupees, this segment functions as our primary revenue and margin engine. Our digital ecosystem seamlessly merges online discovery with nationwide physical fulfillment, leveraging geolocation to automatically route orders to the nearest store for the optimized inventory management and the fastest possible delivery. We operate within a highly resilient Indian women's ethnic wear market projected to reach 2.5 lakh crore rupees by 2030 with a steady 7% annual growth that insulates us from discretionary spending fluctuation. To capture this opportunity, Kiaasa is strategically positioned as an affordable luxury brand catering to the value-conscious demographic in Tier 2 and Tier 3 cities. By seamlessly integrating our digital storefronts with our physical retail stores, we are building an omni-channel presence exactly where the modern Indian woman curates her wardrobes. A central pillar of our profitability is our unit economics and margin protection strategy. We employ a dynamic inventory cascade mechanism across our store stratifications, guiding products from premium upscale malls down to our fixed price 999 stores clearance formats. This systematic approach ensures rapid capital recycling and minimum dead stock, all while fiercely protecting our premium brand perception in primary market. Fiscal year 2026 has been a definitive period of disciplined execution and scale. As of May 2026, we have expanded our footprints to over 124 active EBOs across more than 70 cities. Financially, our total revenue from operation for this year stood at 134.63 crore rupees. We achieved an EBITDA of 24 crore rupees, reflecting a strong margin of 17.8%, while our net profit reached 11.17 crore rupees, representing a 24% year-over-year growth. Operationally, our same-store sale growth accelerated to 12.89% and our customer base increased over 5.5 lakh. Looking ahead, our strategic trajectory is focused and ambitious. We are thoughtfully evolving into a holistic lifestyle brand. We are We are thoughtfully evolving into a holistic lifestyle brand, having introduced Kiaasa Divas for young girls and rolling out bespoke DIY studio brand for custom ethnic wear, with a clear objective to expand over our network to 250 stores by 2028. We are optimally positioned to capture a large share of the modern Indian women's wardrobe. Thank you for your time, and I will now open the floor for questions. I am sitting with my team here, my core team, and they will be helping me out to answer all your queries. Thank you.
Thank you. Participants are requested to raise their hand for the questions. Also, one can request their questions in the question box. We will wait for 2 minutes for the queue to form. Okay, first question is from Mr. Ashish Thakur. So you may kindly unmute and introduce yourself.
Hello, am I audible?
Yes.
Good evening, Prakash.
Good evening, sir.
Thank you so much. So myself, Ashish Thakur. I'm from Alpha Investments. I've been tracking your company since last quarter. So having a couple of questions. Looking at your EBITDA margins, saw really solid jump around 17 to 18% this year. Last set was around 13 to 14%. Could you help us understand the main levers behind the 400, approximately 400 to 500 basis points expansion? And how do we look at this as a new sustainable baseline going forward?
Sir, your voice is not clear. Your voice is not clear.
Am I audible now?
Can you be a little bit loud, please?
Hello, am I audible now, sir?
Yes,
Yeah.
much
So
better.
looking at the EBITDA margins, I was asking we had a solid jump around approximately 17 to 18% from
Yes.
last year, 13%. Could you let us know what is the main lever behind this 400 approximately 4% of BPS jumps, or should we look at this a new sustainable baseline going forward?
Yes, it is basically the EBITDA has increased, and it is basically because we have improved our sourcing efficiencies. We have like better vendor negotiations through the bulk procurement, and we have much better control on the operational parts. That's the main reason how we are moving towards improving the operational efficiency and thereby improving the EBITDA margin.
Any specific initiatives to improve this margins into a better mode, and what would be the max or the maturity point to be an expansion level?
Not audible. There is some issue.
Okay,
The
I'll
last
join back.
question was the last question was not audible. Can you type and maybe my team can help me out? The last one, last line which you spoken. Sir, the last line, please.
Audible now, sir?
You are audible. The last question I could not hear properly.
Yeah, I was asking you how sustainable is this EBITDA margins and any other initiatives?
Yes, we are growing. We have a vision in mind, and we are growing. A similar way. We are trying to minimize the cost, the operational cost. We have taken many initiatives in order to consolidate many things. That's the way forward for the next 5 years. So in long run, you'll see a better EBITDA and a better margin ahead.
So as we see clearly that we are pushing hard into tier 2 and tier 3 cities,
Yes,
since operating expenses are low there, and
yes,
the average selling price is also likely lower than your premium mall collections locations. So how is this
yes.
shift impacting your store level margins?
Sir, tier 2 and tier 3 cities contributing maximum in our business because the aspiration level of the public has gone up and they are ready to spend for a brand which is providing better quality, luxury, affordable garments when they compare to other brands, and they are ready to pay. So when I'm saying my ASP is 2000 to 2500, it is an aggregate. So somewhere I am getting 2000, somewhere I am getting 2500. So the idea is first as a young brand, first make a habit of the customer visiting us, and then we can, introduce new items, new things, increase our ASP and increase the margin ahead.
Okay. So as I saw, EBITDA margins is also going good, and post your IPO, your cash and cash balance is also sitting at around 30 CR, more than 30 CR, I guess. Could you walk
Yes.
us through your capital allocation priorities and the timeline for deploying these proceeds over next couple of years? And how company is planning to deploy this total amount of approximately 46 crore in store opening? What is the timeline and what sort of revenues we can directly expect from these allocations?
So we have raised this for this money for store operation only, and the objective is to open around 66 stores in next 2 years. So that's 46 crore that you see over here is only for opening the store and is for capex and inventory book.
All right, all right. Okay, sir, I'll join back the queue. Thank you, sir.
Thank you, sir.
Thank you. Participants are requested to raise their hand for the questions. Also, one can request their question in the question box. Next question is from Mr. Harshit Khadka. So you may unmute and introduce yourself.
Hello, sir. My name is Rashid Khadka. I'm an analyst from Robo Capital. So we have recently started tracking your company. So my first question is regarding like we are expanding the total number of store count from 124 to 213, and the majority of it that would be led by the COCO format, where we are essentially almost doubling our store count from 110 to 198. So just wanted to understand that what is the average size of the current stores that we have and the average size of the new stores that we are going to open, the unit economics, and what would be the capex required.
Okay, sir. So the first question, one by one, I'll answer your questions. Uh, we have a overall vision of opening 250 stores by 2028. So that's the first vision is very clear. In this part, we have raised for opening 66 crore rupees, 66 stores, and against that we have IPO fund. So still, if you open a 66 store, the vision is not established. So we'll be opening more stores, and we are moving ahead more aggressively towards our vision. So first thing is very clear that the store expansion will continue. The next part was the unit economics. When you see, you must be having our presentation. So you see the page number 17. There is a explanation about how the things are, average monthly income from a store, and then how much capex we require, how much opex is required, and how much inventory is required to open an average 700 to 1000 square feet stores. That's our normal size, which we are now opening and which we had already opened. Moving forward, we look forward to open our stores around 1500 square feet, little extra as we grow in a bigger cities, just to accommodate few more items like we have recently in the last slides and slide number 19. You'll see we have introduced Kiaasa Divas for the girls, and then the DIY studios also. So we are planning to keep those items also in few stores, and then to accommodate that, we have to have around 1200 to 1500 size of the stores. So that's moving forward. We will be having few stores in that particular sizes.
Right. So it's correct my understanding that for till now the average size of our current stores was around 700 square feet, and now
Yes.
we are going to open it at around 1200 to 1500 square feet, right?
Few stores. Few stores.
Right. So understood. And just
Yes.
want to understand like what is the revenue and EBITDA target for, let's say, for the next 2 years only, for FY27 and 28.
I wouldn't say like I don't. I mean, EBITDA target as such we don't have. But since you have asked the questions futuristic, I could only say that for till 2030, if you see slide number 20, we have given a clear-cut vision and our idea of how a CSR will grow and how the revenue and EBITDA will perform in the percentage. You can check slide number 20. It clearly goes as per our vision defined.
Right, so I'm checking. So are you saying that you will grow your revenue base by 35% CAGR?
Yes, by FY30.
Yes, so till FY30 we will have a top line growth of 35% CAGR and an EBITDA growth of 45% CAGR, right?
Yes, almost.
Okay, sir, understood. Thank you. That's all. I'll join back in the queue.
Thank you, sir.
Thank you. Just a quick reminder to everyone, if you have a question, please raise your hand using the reactions tab. Also, one can request their questions in the question box. Next, we have Miss Riya Shah. Ma'am, you may unmute and introduce yourself.
Hello, am I audible?
Yes, ma'am. Hello.
Yes, good evening.
Good evening.
My name is Riya Shah. So, I wanted to ask I have seen that there are mentions of you of the brand to be in global stores in places like Dubai, London, Canada.
Yes.
So, will these stores be like company owned, franchise owned, or any are you planning to do something else with that?
That's our futuristic plan where we plan to open both Coco and Fofo stores. So basically, we run all our store ourselves. So mostly our idea is to have a Coco stores, but certainly yes, in when we plan out a detailed project on this part, we'll be definitely taking care of inviting Fofo model also.
Okay, and like how are you exactly like planning to expand globally? Just wanted to understand that.
That's the plan for the next, I mean, within 3 to 5 years plan. But yes, we have many inquiries pouring in for Asian countries and wherever there are like NRIs situated. So we are getting inquiries to open the store, but we are going a little bit slow. Let's hope we plan out in next year, 27, 28.
Okay, okay. And I have seen that there's a DIY studio concept like for
Yes,
larger
yes.
format stores. So what kind of additional square feet and setup costs are required for like to integrate the in the standard layout of the store?
Currently, we have done some project. I mean, some project run over here in our existing store format, some bigger store. And what we saw is this particular concept. It's like a boutique store. It is not what we are entering into a tailoring industry. We are trying to, provide customer a better service by providing them with a ready to stitch stock, ready to stitch garments, and that can be used again for customer engagement, gifting options, those kind of things. So we are not exactly entering into tailoring business, but we are trying to engage customer and basically provide a better service. So our idea is to have Kiasa portray as a service-oriented brand rather than a product-oriented brand in the longer run. So we want to be more focused on service part. If a customer comes in, she has options. She can buy the garments directly which is always there. And if she wants, she can get her own stitch and style herself. That's the idea of DIY studios.
Okay, understood. And like moving to the kids section, I have like Kiaasa Divas. It's like
Yes,
a massive market for kids wear. So,
yes.
like, what is your strategy for keeping the customer acquisition costs low and overall strategy in scaling this segment?
We have already done in 25 to 26 stores last year during the festive season, and we got a very good response of mother and daughter duo combination. That's inspired us, and that encouraged us to float this particular category pan India basis. And it has got a different taste. When a lady enter into the store with a daughter, there's always a chance that there's a upselling. There's always
Hmm.
a chance that, and if we keep that quality design update, I think that particular segment has immense potential. And that's we are only focusing for ladies, for the girls from 3 to 13 years of age, in ethnic wear category only.
Okay. And one last question, like right now, the salwar, kurta, dupatta sets are like deriving more than half of your revenue. So,
Yes.
and with other new segments like divas, accessories, like you said, DIY studio. So, what will
Hmm.
be the like product mix for the next couple of years? Like, what would be the contribution?
We are like hoping that 8 to 10% of the contribution in Divas category, and
Hmm.
4 to 5% initially for the DIY studio, which grows to 10 to 12% in the next couple of years. Because that's a different kind of the customers requires a different kind of mindset to have a boutique like experience.
Yeah.
So yeah, so we are not expecting immediately a boom in that particular thing, but yes, that will add on like a service to them.
Okay, sir. Thank you
Thank
for
you.
and all the best for your future.
Thank you so much.
Just a quick reminder to everyone, if you have a question, please raise your hand using the reactions tab. Also, one can request their questions in the question box. Next, we have Mr. Raghav Srivastava. Sir, I may please unmute and introduce yourself.
Hello.
Yes.
Yeah.
Hello.
Yeah. Hi.
Hello. Yes,
Uh,
Raghavji.
I'm Raghav from Waterstone Capital. So I have some 3 to 4 questions. My first question is on operational parameters. So in your presentation, I have seen that your same store sales growth has gone up from 7.1% to 12.9%.
Yes.
So actually, I wanted to know that, just a minute. Yeah. So how much of that was from volume and how much was it from pure pricing and ASP hikes?
As as the brand is growing,
Yeah.
Raghavji, let me explain you a little bit more about how this number has been achieved. As the brand is growing, people are getting aware of what we are providing to them. And depending on the buying behavior, we are also, changing ourselves as per the customer demand. We are providing them as they want and improving our delivery from every quarter to quarter. That's one thing where you see the same store growth. Why the same store growth is reflecting. First thing is that. Second thing, as the repeat customers, we have around 30% of repeat customers. It ranges from 21%, the lower one, to 30% of the repeat customers. So still we have the brand is in very nascent stage. This and we have 70% of that particular customers, a new customer visiting us. So for them, it is a new experience. And we are trying to, capture that particular thing to convert those 70% into these 30% repeat customers. We have to increase this 30% to 50% or something beyond that, depending on how good we are into the service part. So that's one of the reason you see the growth of the same store growth is happening. It is both through quality and through quantity.
Got it. Got it. Yeah, so my second question was, your average selling price has jumped significantly, but your average bill value has stayed flat. So how are we planning to address this basket size?
Yes, we have this. We have also figured out this thing, but overall, the ASP, the change in ASP is because we have like launched most of our stories recently, where our designer have created our own signature stories, and based on that, we have staged a level up than the previous year, and thereby contributing to the increase in ASP. That's the only way we have to, make this brand feel little luxury. It can't be like, we are like fast fashion brand, but being a fast fashion brand, we have to also focus on how to increase the ASP. And in order to that, we have to keep around 10 to 15% of the stuff which are of little higher value. So that's one of the reason where you are seeing the average selling prices have gone up. But yes, we are a little bit lagging. Maybe operationals, or depend on store to store also, how the store managers and the staffs are behaving with the customers to convert, to make it upsell more products and increase the basket size. So that's one of the reason we'll be working on that.
Okay. Okay. Yeah. So I have some two more questions.
Please.
So regarding the omni-channel strategy,
Yeah.
so wherein the physical stores will be fulfilling the online orders. So what is your average delivery time right now? So is it few days or is it same day delivery or something like within a few hours? Uh, just want to get an idea over it.
Yes, sure, sir. Actually, this when you enter into kiasaretail.com, we have partnered with Porter, and within 4 kilometers to 5 kilometers, we are delivering within 2 hours. So that's one of the thing that we have captured. And if they are intercity, then we have partnered with the other courier companies who are 2 to 3 days delivery is there. So that's one of the point where we are like aggressively delivering our goods to the customer.
Okay. Okay. So max is 2 3 days, right?
Max is 3 days, depending on the pin codes or the nearest store location. Because the advantage of this model, this omni-channel model that which we have adopted is, first thing, we are selling fresh item in our store, which doesn't means that the online means it is the season 2 or season 3 goods at a discount price. No, it is the real stock, real time. Whatever is selling on the store is being sold online. So the customers in deep inside Bihar can order from Delhi stores. So they can get, they can get the real garments or the new design from Delhi in Bihar. So that's the difference we want to create.
Okay. So one last question I would like to squeeze in.
Please.
On the manufacturing side, you are relying on a few dedicated contract units. So
Yes.
does this create any vendor concentration risk for you? And is
No,
there
no.
a pricing power that the vendor commands? Basically, trying to understand the process we have here.
No, let me just explain you a little bit more. The sampling is done by ourselves. The designer teams are over here who designs the storage collections, and then we have dedicated supplying partners at different cities. We have a type of agreement done with them, and they produce for Kiasa label, and the goods are produced by them, and it comes to our warehouse, and from here it is distributed to all the stores. That's the normal process that we have. In case that you say the pricing part, we get good pricing because we have a volume order. And if a supplier is our regular supplier, they value the commitments. They always value that they have a record that if our goods are in, suppose 1,000 pieces of inventory is in, and the sell through is over 30-40% in a month, we know that the supplier is very good category, and his quality and his finish are fine. Therefore, we have no returns and all. So we always encourage that supplier profiling first. So based on the supplier profiling, we always move ahead, and we tend to keep the same supplier as much possible as possible.
Yeah, that's it from my side. All the
Thank
best
you.
for
Thank
you. All the best.
Thank you. Just a quick reminder to everyone. If you have a question, please raise your hand using the reaction tab. Also, one can request their questions in the question box. Next, we have Mr. Jayesh Shah. So you may unmute and introduce yourself.
Hello.
Hello, sir.
Yeah. So I just have a few questions. You've laid out an aggressive target to reach 250 stores by FY28 and 300 by FY30.
Yes.
So between Coco, Fofo, and the new multi-brand outlets, what's the exact mix you are targeting when you will scale?
So when I'm saying that my vision is for 250 stores by 2028, I'm only talking about the EBOs. I'm not talking about MBOs at all. So it's currently we have 124 operational stores, and for the next couple of years by 2028 we'll be adding another this much for 250 MBOs. Beside this, we have a different plan for MBO where we are aggressively discussing with a few large players in the market, such as Reliance is one of them.
Fair enough. Then my next question is, what is the average capex for a new store? Like, is it about 24 to 25 lakhs? And does this vary significantly depending on whether you are setting up a premium high street store in a tier one city versus a tier three city?
Yes, sir, you are correct. It depends on market to market, mall to mall, and high street, or if it is a mall stores, it varies.
Next one
So,
is,
so, so as of now, what you are saying is correct.
okay. So another one is I'm actually curious about 99 factory outlet format. So can you give me a sense of how much is it contributing to the revenue and what is the typical payback period looking like for these clearance stores?
So 99 store is our new concept. The you can other way you can call it as a factory outlet, which is the last stage of liquidation of the goods. So it acts like a liquidation center. If you see our slide where we have explained page number 13, the where we are explaining about inventory cascade, how the inventory flow is there from one category stores to other category stores, and how they are flowing down the line. So the last stage is 999, where we proudly sales all the items, Kiasa items only below 999 rupees. So at least at that point of time, we are able to get the product cost. So that's one of the ideas. Second, since these stores are like we started in 24-25, so we have around 7 to 10 stores now, and those stores are off, I mean, like off location, I would say, like smaller cities, smaller towns. So there the rental is very less. We have only one staff to run those stores. So that's how we decrease the OPEX cost. The CAPEX is also not of the premium quality. So thereby we just turn it around very fast. That's the concept of 999 stores. And if we get a good response in 999 stores, and if we get a good demand, then parallelly in the nearest city to that location, we open a Kiasa brand. That's one of the advantage that we get by opening 999 by Kiasa.
One last question. You are
Yes, sir.
planning to enter multi-brand and large format stores in FY27.
Yes.
So, what can you give a picture about the margin profile regarding the same and the working capital cycle for the segment as
Yes.
compared to EBOs?
Yes. First of all, the going into entering into MBO is not it is what we have decided to. It act like a marketing point, a brand awareness point for us. It will not provide us it will not provide us a larger pad, or it will not impact the bottom line. But yes, top line will be there. Top line will increase for sure. So over here, what we are targeting is, like, suppose for example, we have an offer from Reliance regarding opening of 150 counters. So they take a margin of around 28 to 32%. So if we calculate that way, it is not going to have a bigger, a good margin for us in terms of PAT percentage. But yes, since the margin, the footfall is very high, the engagement is high, the brand presence will be higher, brand awareness will be higher, and maybe because since suppose MBO is present in a same mall, and our store is also there, EBO is also there, we'll be able to convert those clients to our EBO stores. That's one of our objectives, to enter into MBO and LFS stores.
And that's it from my side. All the best.
Thank you, sir.
We believe there are no further questions from everyone. We'll now take questions from the Q&A box. So the first question comes from Rahul S. The question is, our revenue grew by 11.2% in FY26, but the long-term guidance outlines an aggressive 35% revenue CAGR through FY30. Can we speak on this?
I can't see those. Let me ask my team to respond on this, because where it is.
So the questions are in the Q&A box.
Basically, I'm not able to see the questions clearly. Okay. Just a second, please.
So I can repeat.
No problem, no problem. I can see from the system. The revenue grew by 11.2% in revenue, but the long-term guidance outlines an aggressive 35% revenue CAGR. So can you speak on this? Yes, because when I'm talking about FY30, I'm talking about next 5-year plan. And in 5-year plan, beside 250 stores, the 250 stores target, can you hear me? The 250 stores target is for 2028. That's the vision. But when I'm talking about 2030, another 100 stores will be added up. So that will another add on to our revenue. That's the calculation we have done. And plus, we are also aggressively moving on online part. We are all aggressively moving on the MBOs and LFS part, where we'll be adding, maybe by 2030, we'll be adding around 600 to 1000 counters in different LFS. So those will be contributing on revenue. I hope I'm clear on this part.
Yes, sir. Can we move to the next question?
Thank you.
Okay. So next question comes from Mr. Vaibhav Singh, who is an individual investor. He firstly congratulates the management on the strong set of numbers. And his question is regarding,
Thank you, Vaibhav.
his question is regarding the future growth trajectory. So he's asking, how much of our incremental sales do you expect to come from online e-commerce marketplaces? And if you can guide for any percentage segregation between online sales and physical EBOs in FY27.
What? Just a second. So let me just answer one part at a time. He's questioning about the online contribution. As of now, it's very minimal. It's like 1-2% of the total revenue, because you have just started this new concept of online sale. And secondly, we see in the next couple of years, we'll be growing on this by 10%, almost 10 to 12%. Is it okay?
Okay.
Thank you.
As there are no further questions, we would like the management to give the closing remarks.
So thank you everyone for taking out this time to join our earning calls and for your insightful questions. We are incredibly excited about the journey ahead as we continue to scale Kiaasa into a nationally recognized lifestyle brand and execute our strategic expansion target of 250 stores by 2028. Thank you so much.
Thank you for joining Kiaasa Retail Limited H2 and FY26 conference call hosted by Confidely Partners. Participants may kindly sign off.